This is what you are getting from your money market fund, and we have four bases to distinguish a saving platform and one that combines both saving and investment for you. And number one is the purpose or goal. A platform that you're going to use for your short-term goals only, that becomes a saving platform. But if you are using a platform for long-term goals, then you are on an investment platform. A combination of the two, short-term goals and long-term goals, can also be done on one platform. And such an hybrid platform is a good one for you as an investor. The second base that you are going to use to determine whether you are on a saving or both a saving and investment platform will be the investment period. Options that give you a period or utilization of up to 1 year, that is purely a saving platform. But an open platform that can allow you to a utilization of more than 1 year, suitable for your long-term goals, then that one is a platform that is giving you an investment platform. The third one, and very important, is return. What percentage of return are you getting from the platform that you're using? And on the basis of return, the most important thing that we look at is the real inflation. Inflation is given as a percentage that is supposed to be a value within a given range. And the Kenyan range is 2.5 up to 7.5%. Ideally, a prudent investor would look at the upper limit or the upper range value of 7.5%. The regulator will make sure that they maintain inflation at the median values at best, that is at around 3 to 4%. And as per this schedule, our local inflation rate increased from the 3.3% in January to a new high of 3.5% the tail end of February. And considering the normal range of 2.5 to 7.5%, then to determine whether you are on a saving platform, if your return is just big enough to cover your inflation rate or inflation, where inflation is the animal that eats the purchasing power or the value of your money, then that is purely saving. But if you're on a platform that gives you way more than enough to cover inflation, that is when you are doing investment. And therefore, it's important with those three, we also look at the fourth base, which is risk. Savings require a platform that generates a minimal risk or near zero risk, while investments will have a categorization of risk from low risk, medium risk to extremely high risk platforms. The range gives you opportunities that suit your risk appetite. So for investment platform, you can either go for low risk vehicles, you can also go for medium risk vehicles or highly risk investment opportunities depending on your risk appetite. And the last one is access and flexibility. In most cases, savings would require to be held in easily accessible, flexible platforms or vehicles, while investments would require inaccessibility to curb destruction of those investments. And therefore, using those five bases, you are able to tell whether your money market fund has given you a saving opportunity or you are getting both saving platform and an investment opportunity. And going by the four and stressing on the basis of the return. And in this one, we are looking at the upper limit of 7.5 to be the real inflation rate. In the normal range, the high inflation goes to about 6.5 to 7%, and that would be the real inflation in the market. And therefore, investing in an opportunity that is giving you way below 7%, 8%, 9% would technically say you are just saving. But we have money market funds in the market that has given us suitable investment opportunities, investment vehicles that you can hold your investment on them for the long term goals. And we have the top 5 money market funds which have been resilient and consistent in giving us competitive high returns that beat inflation and also in growing our capital consistently. And this includes our own Etica money market fund, which today stands at excess of 6.6 billion worth of assets under management, and compared with your previous reported value of assets under management by the regulator, which stood at 4.6 billion, then it means Etica Money Market Fund has been the fund manager of choice by Kenyans and now has increased by another 2 billion worth of assets under management. Besides the basics that a money market fund is supposed to give you in terms of accessibility, in terms of flexibility, in terms of liquidity, and the rest, there are some specific benefits that have been given by this fund manager to the fund members. And these include, among others, number one, an excellent customer service. And that one can be proven by the nature of comments that you will be seeing in this video, because the customer experience that has been offered by the Etica fund manager is above reproach. We have a 24/7 round the clock customer service. We have a WhatsApp and an active email. Where else can you get a fund manager responding to your questions the dead of the night at 2 a.m.? It's a customer service that has been tailored 24 hours in a day, 30 days in a month, and 365 days in a year. Customer service and the customer experience exceeds the returns that we are getting from the fund managers. Then number two, we have least costs. The level of transparency and honesty in the fund fact sheet by Etica Capital has revealed that Etica Capital has 0 hidden charges. We have quite a lot of fund managers who do not disclose that they punish you for making multiple withdrawals in a month by charging you an extra 700 shillings, 1000 shillings, or 300 shillings, others 500 shillings for every extra withdrawal in a month, meaning that they only permit you to access your funds once in a month. While they will defend that one as a good thing for you as an investor, when we are going for money market funds, one important quality of a money market fund as a basic that we look for is accessibility of our money, liquidity of that money, meaning that I can hold my most needed emergency fund in a money market fund. I can hold my emergency fund for my business in such an environment, meaning that I should be able to access my money in multiple times, daily, weekly, or even monthly. Etica Money Market Fund does not punish us for making extra withdrawals in a particular month. You can make as many withdrawals or access to your money as possible. There are no introduction fees or entry costs to this money market fund. There is no maintenance costs. There are no performance costs. We don't have ledger fees in in Etica Money Market Fund compared to others that are charging a monthly ledger fee for keeping, just maintaining our account. We have others that are charging performance fees when they exceed or when they give us a return that is beyond a certain value. But Etica Money Market Fund only charges the normal management fee, which is capped at 2.5%, but Etica charges only 2%, meaning that they also have reduced from the 2.5% to a low of 2%. Then the third thing that is also quite important is high competitive returns. Many people from the competition made a lot of noise about the new entrants in the market, but Etica Capital Limited, the fund manager, has beaten those holes without lifting a finger, but giving an excellent customer service and competitive, consistent returns to their members or investors. In 2024 alone, the year just ended, the Etica Money Market Fund gave an average high of 17.6%. That figure was so high that compared to the other high risk platforms, the special funds, the most known special fund gave a return of 18%, which is more or less equal to what Ethical Money Market Fund gave, and that is competitive. But looking at the inflation rate, which at 3.5%, and look at the 15% return that you have at Ethical Money Market Fund, if you deduct the 3.5% from the 15%, you are left with 11.5%, which is above the inflation rate, and that is growing your capital. An amount of more than 9% net that is supposed to go towards growth of your capital, that is an excellent return. And that is what we are getting from Etica Money Market Fund and Etica Fixed Income Fund and also Etica Wealth. Going by the Etica slogan of imagine more, is more like being told this is the promise that you are making, but just imagine what more that Etica Money Market Fund or Etica Capital as a fund manager can give us through their own products. Then there's the other thing that is so important, and that is actual flexibility. Flexibility in most products appear just as a term, but a practical flexibility happens when you don't get punished for exercising that attribute of a product. Flexibility in most cases happens when you have numerous options to choose from, and that is when you look at Etica as a fund manager as numerous products that give you almost same qualities, and therefore it's a platform that is giving you more than one opportunities to choose from. But one practical part of flexibility is when you are allowed to access other products, other opportunities outside the fund manager's platform without getting punished for that. And this happens especially when we have lucrative uh, fixed income instruments, especially in the primary markets when they are issued by the central bank, where you don't get penalized for making withdrawals to access such important investments. When you are making repeat withdrawals from your money market fund account, your fixed income account, without getting punished for extra withdrawals, that is a measure of free practical flexibility. I will get a good infrastructure bond being issued by the government. I will be able to access my money that I've parked in the money market fund and able to take advantage of that opportunity. Then I will also be able to access another chunk of my money to address maybe other issues without getting surcharged for the extra withdrawal. That is free practical flexibility. Thank you for watching, and see you in our next video.